Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So you're seeing green arrows around the world this morning, as it seems as though most trends remain intact. Before we dive into our markets, Scott, how do you think we look overseas?
Well, you have the Nikkei bouncing back almost 1%, and this range has been tight. They did have a 3-day little sell-off to start the year, but it was up so much last year. I'm looking at the chart of the EWJ, and it looks pretty impressive here. If you look here and you've been looking for consolidation for a while before perhaps getting back involved for some type of move, this is a hefty consolidation. So if this were to get above just say like 1220-ish, or maybe hopefully you're in a little bit now because that's part of the 2014 thesis that it can continue. Maybe you buy a little bit here, it goes above there, you add it, and then all of a sudden, boom, you're back to the highs of last year. But overall, I would say nice digestion considering the size of the move that we've seen in Japan in the past year and a half.
And then in terms of our markets, last week we did see some mixed, pretty much choppy action, somewhat random, which seems to be the theme so far for 2014, that kind of choppy, random action.
Choppy, random, thin, potholes, individual names. It hasn't been the easiest, 3 weeks of trade. Right. But overall, when you look at the chart, you're like, oh, looks really easy. Yeah, always when you look in hindsight. But anyway, you go to the chart and you look at the trends and you have to figure out which one you want to follow. And as far as, the major one from last November, haven't even come near it. Okay, as far as the accelerated one that we talk about, that we trade for alpha and P&L, came close right around here about a week ago. So if we take a close look there, so we could definitely take a look at the levels and the trend lines there. Here's what happened. Okay, this was your first day, that down day that everyone was so surprised of, came up a little bit, then boom. On this day, you did not know whether or not we were in the start of a new correction. But what happened? Got engulfed, and now we're holding higher. So with that being said, we have 1835, which was Friday's low, and we have the 21-day right here at 1830. Until the bears could actually keep us below the 21-day moving average for more than a half a day, because that's probably what that was, because it was gapped up the next day, I would remain looking for opportunities on the long side, and keep some risk on. If we do get a few day close below that, then maybe they'll have their chance for some lower prices. But right now we're holding higher. 1835 is short-term support, and your pivot resistance comes in around 1850.
Well, let's check the temperature then of the different sectors. Let's start with the Qs, which finished down on Friday about 0.6%, retesting the 8-day EMA, which then I would assume is the key moving average that we need to keep our eye on.
Yes, and I think we should just fly through these because as we looked at them before, they're all holding above the 21-day. And, that's what I talk about as far as trends. If you're navigating for the intermediate trend or for cash flow, 8 and 21-day, that is what you follow, not the headlines or not the doomsdayers. Okay, you look here at the Qs real quickly. This is that last trend all the way up. It did try and test it right here, was below the 21-day for a day, so you could have taken off some risks there. Came right back up, and now we're hugging the 21-day, or the 8-day, and that right there stands at 87.67. The longer we stay above this, higher the probability we make new highs. Just keep navigating it until something changes, and right there, nothing really has changed.
Well, then in flying through, like you said, the Russell closed above the 8-day EMA, which it held in well, which is a positive sign for the strength of the market.
Yes, you have the Russell, you have technology, both above the 8-day. Some people take a little bit off if we go through the 8-day, so then they're ready for the 21-day. If you have a little bit more of a a step back approach because you don't trade every day, you look here, you look at the Russell, and it's still above the 8-day, well above the 21-day. It had its chance right there. Couldn't break below it. It's above the trend line. So overall, no signals from the Russell telling you to run for the hills yet.
And then the XLF broke below the 8-day. But now that bank earnings are behind us, what do you think of the composure of this sector?
I think that it was good to see that each one was created different. Citigroup came out with a poor report, so it's back in its base. So if you look real quickly here, to show you how the thesis of stock selection will be key. You had a breakout. If they were going to discount it, they would have held it right here at this area. Instead, it's back into this base, and this has been a big base. And it came out, and the report wasn't hot. So at this point, maybe you find some kind of red dog reversal. If you're still long tier 1, I think that's fine too. I do not think this is your high of 2014. Just depends how you navigate it. If you're a trader and you were long Morgan Stanley, for instance, you got rewarded. This hasn't really done much in the course of the past 3 months. Broke out, gave you a nice gap and go, showing you that there was appetite up here. So now you could trade Morgan versus 33.40. Okay, the longer it stays above this and digests, the higher the probability this stays your leadership status. Then you go to something like Bank of America. It also gapped up, but this had a heck of a run. Not like, Morgan didn't have as big of a run going into it, so it's needed more time. So now if you look closer here, how to navigate it, still a little choppy action up here, but overall above the earnings gap, above the 8-day, above the 21-day. So, that is healthy. If you're trading short term, use 16.99 as your pivot, for both ways, as far as that action is concerned.
And biotech looking good as well. The IBB closing above the 8-day, but there's been a lot of individual positive action within this group. Even though we've talked about how these names can be kind of tricky to trade, it's been great in 2014 so far.
Yes, and some that have like these, sifters or trade idea systems where you see the volume come in and you combine that with the pattern, they're jumping on it quickly. As far as the overall sector, you look here, it is a little extended. You take a look here from the 8-day, a little bit of a doji, so that could pose or mean a little bit of rest. But overall, lots of nice action. And you look at something like BIIB, which is Biogen, nice pattern here. I think this is something some of my traders will be focusing on. If this can get above 300, it could go again. Look at the nice move it had after this igniting bar. And there are a lot of little ones out there. Those, just be careful and keep it tight.
Right. All right. Well, coming up, we're going to go in the trenches with high beta tech. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with high beta tech stocks where the action has been pretty mixed. Amazon just had a nice 2-day rally, was able to reclaim the 8 and 21-day, showing, Scott, as you just said off camera, the people are still clearly shopping online.
Yes, I think we were laughing about it in Christmas. I'm like, my wife was never shopping, but every day these little black boxes or brown boxes would come to the house every day because most of it was online and a lot of it was done through Amazon. And as far as the stock, it's been great for stock pickers, for stock investors, and here and there you get momentum as a trader. So the question is, can we get some momentum in this name for an intraday trade or for continuation? You look at the chart, you'll see right here, it has been going sideways for almost a month. It tried to break out on Friday and couldn't. Maybe those options, expiration related. So at this particular point, if it can get above Friday's high of 403 or 404 with volume, maybe we get an extra trade there. I think this could be, on your go-to list if the action warrants it.
Right, and Google continuing to show it's been best in breed, grinding higher above its 8-day EMA, and this one's just been proving that a dip has been viable.
Yes, anytime it's touched the 8-day, if you've wanted to buy the dip, that's been the opportunity. And even there's been some breakout points along the way. Now it's upgraded, up another 10 at highs, so I've seen a lot of bears on TV about Google, and trading-wise, I don't think there's any reason to be bearish on Google. You look at the chart, you'll see here's the trend since last, the earnings from last quarter, huge gap. Unfilled, showing, a lot of power there. Then along the way, you've had some trades. Right here was a nice little breakout trade. Right here was a nice little breakout trade. But overall, it's just been following this trend, and now it's opening above the all-time highs of 1160. Now see if it can hold above it. Chasing this has been tough. Buying it at the 8-day has been, a little bit better, I think. But at this point, as long as this trend is intact, do not fight it. And earnings are coming out next week, not this week, so that can continue.
How about Apple? Sold off on Friday, dropped about 2.5%. How do you approach this one now today?
Well, some people try and approach it in a macro sense. Say, I'm just buying Apple and I'm staying with it no matter what. And if they did that last year, they were hurt. Especially on the big decline. They made back some of it, after the summer when you had that double bottom. Some like to approach it on a swing basis. As long as it's acting well, you try and stay with it. So everyone has a different type of plan. Depending on what's going on, I approach it differently, sometimes just as a day trade, sometimes as a multi-day trade. And recently we've had 2 big gap ups that if it was that strong, it would have held and didn't to navigate. So you look at the chart here of Apple, you will see here's that double bottom from the summer. Here's a trend line that's been intact. This was the first China Mobile News gap up, didn't hold, corrected. This is, I guess, the second, their watershed news, gapped up, went inside and down. So the question is today what to do. 539.90 could be your action area. If it trades below it, maybe get out of it. If it holds a trend line, comes back above, gives you a red dog reversal, try and maybe get back into it. Overall, though, it's acting okay. It's still pretty close to last year's highs. So with that being said, you might just need to wait till earnings, and earnings aren't this week, they're next week, so just navigate it on smaller time frames till then.
LinkedIn had a rough session on Friday as well. It gave back most of the big gains it had seen on Thursday. On Friday, dropping about 4.6%. Would you say at this point this one just needs some time to figure itself out?
Yes, and there with this stock, unless you've been just holding it since it broke above 90 2 years ago, there's been spots to navigate. And the best spot actually was on that downgrade, a few weeks ago. When they downgraded it below 200, you had that red dog reversal. That gave you some power. And now if you look at it, that was here. Okay, you had your red dog reversal. That price was 202.55. Then you had some commitment to it. And it did look like it was going to have a real healthy breakout. And so Friday was something I would say was frustrating if you tried to be long. But overall, it did kind of fail, I guess, coming into this trend line, coming from the lows to the highs, not the easiest thing to do. So I would say today, see if it could hold above 219. If it can't, then it's just still in this range, and it's something that just you need smaller time frames on. If you overlook, if you look at the monthly chart, still at this, overall, here was your breakout from a macro sense, all the way down here around 100, and now it just, very choppy, but it looks like it's still just flagging on a monthly and absorbing what's been a heck of a move. But on the daily, you got to know how to navigate it, and at this point, it's a little tricky, and it should not have given back more than half of this bar if it was going to be that strong.
Meanwhile, divergences continue between Facebook and Twitter. Facebook broke below its 8-day to retest the 21-day, whereas Twitter was actually able to regain the support of its 8 and 21-day. So what do you think about these names heading into this week?
I think both don't have earnings this week either, so they could do whatever they want with it. Facebook, I feel like I've been a little spoiled because it's been such really nice action over the course of the past 6 months that we all wanted it to make new highs above 59.5, but why would it, I guess, do that before earnings? So with that said, with that much time between now and then, you look at the chart. I was long on Friday, got stopped out just because it traded below the prior day low of 56.83-ish. And now, it looks a little vulnerable here. So if you're not looking from a macro standpoint of holding it, for this trend, I would say below Friday's low of 56.07, I would lighten up. Some might even look for a cute short below that, and then maybe it comes back in to test this support because, again, earnings are not for another week, so the stock could do whatever it wants. So if you're trading at micro, know the micro levels because, we're at a pretty important one right there.
All right, well, let's do some quick hits here and talk CRM, which, if you remember that big gain it had on last Wednesday, it's been digesting that gain. Is it getting ready, do you think, for another move higher?
Yeah, this one, I've started to watch it again into this new year with a few other names as we put together the 2014 report. This wasn't on it, but it's been acting well. You look at the chart, you look at, a lot of people use this service. Boom, this was one breakout, held above it, another one, and now it's trying to do it again. So moving very well. So if you want to perhaps look for a cash flow trade above 59.91, that is your pivot spot.
And how about over in the casinos? Las Vegas Sands showed some relative strength on Friday. What do you think about this one's upside momentum?
It just continues to hug the 8-day, and it's been very impressive. That, Wynn, MGM, all three of them. I feel like I haven't been active enough in that group. But anyway, if you're still in it, you look at LVS, it's just hugging the 8 and 21 day. This was a clean breakout way back when in early December, and now it just continues to go. And it's not really even that extended. So if it wants to get above Friday's high, it showed relative strength that day, and hold above it 81.96, it can continue. So stay with it. MGM, I just got to point out, because a lot of people in our community, we've talked about this thing since like $8, something that we talked about putting in the drawer perhaps, and it's just following the 8-day and squeezing all the way up. And if you look at the weekly chart, which we've gone over a few times, or actually maybe you have to go to the monthly chart, it's coming into an area that I think you could be trimming and trailing in. I wish I held it longer than I did from last year, but it's coming into this spot where I think could be tricky. So if you've been in it since last year, since 8, 12, 14, 16, maybe you trim and trail into the 27 to 29.
How about Tesla holding higher since its rally last Tuesday?
You know what? Tesla gave us all a I would say, a nice surprise because it was out of play, and then he came out and said demand is 20% above what the street thought, and it's acted well since then. And if you look at the chart, you will see that look at this red dot reversal right here. If you weren't expecting it, you didn't have to. It just you know the pattern and then navigate it. 137.82 is when it traded below and came back above. Then you have a nice little flag being put in place here, starting to nudge above it. Overall, the action is better again in Tesla, and we'll see if it can continue. Maybe if it gets above 173, it heads back to this 180, 190 area. But in order for it to make new highs, I'm sure we're going to have to see earnings come out, and they don't come out this week. So just trade the 5 and 15-minute charts here for now.
And how about BlackBerry showing up out of nowhere with 6% gain on Friday? What do you think? Is this going to be a new in vogue name this year?
I wouldn't go that far, but there has been a lot of concern about security, and it seems as if they're trying to be like the secure device out there for networks. But anyway, with that being said, I was having a bad day Friday, and I saw it pop up. I'm like, oh, you know what? Just to make things worse, I'll buy BlackBerry. And PS wound up closing on the highs, and people on the virtual trade floor, you still see it, it's there, and the reason being because the chart's okay. I don't believe in the company, but I believe in charts, and it triggered above this little spot, and now it looks like you can get 10 plus. So let's see if we can get 10 plus. I don't know if it happens today, maybe in the next few sessions, and I guess overall, let's take a quick look at the weekly chart, see what's going on there. Yeah, there's a big resistance. Remember last time they were talking about some kind of Activision about it, and that was closer to 15. I think there was a Seeking Alpha article over the weekend, a Citron saying 15 to 17. So if it's going to get to 15 to 17, it's got to get to 1017 first. So let's use that as the first objective.
All right. Well, in closing, earnings will continue to roll in this week, and as we've talked about the choppy action that we've seen so far this year, what's your general advice heading into the trading session?
Well, a few things. First, with earnings season, you got to know what you own and know why you own it, because stocks could gap up 20 points or down 20 points. Unless you're sitting in them long term, you have to know, because as a trader, I tend to not take many stocks into earnings, or maybe I usually rarely do it, if ever, because I take options. Options, risk is premium paid. If you have a strong idea or thought that it's going to go to the upside or the downside, do a call spread or do a put spread. Don't just blindly buy the stock, because if you're wrong, it could blow up your account. If you're an investor and you've been in it for years and you could, take the pain of it, maybe even hedge with some options and do some kind of collars. But these are all, more intense lessons in education that we do provide here and there. So with that said, I'm going to try and keep it a little bit more simple. I think the last week or two I tried to have 8 to 12 positions. Maybe I'll do 4 to 7 and know when the earnings are coming out. This week there's a lot of earnings, but it's not really the specific names that we tend to be very active in. That's next week. So we'll see what happens. And again, as long as the S&P stays above the 21-day for more than an 18-hour basis, I would stick with the current trend, and that's been looking for opportunities from the long side, because that's the way it's been going.
All right. And with that said, that's your morning call for this Tuesday. Happy trading. Have a great day.